Nischal Maheshwari is with us, co-head institutional equities and head of research at Edelweiss Securities. Nischal, thanks for waiting. Good morning, Prashant here. So it looked like, Nischal, the market once again, for the second time, was going to undergo a meaningful correction. Are we still there, Nischal? Are we still in a slightly undecided kind of territory? A lot of risks, markets have run up, earnings have just about been in line. What's your view?
Yeah, I think so. We are in sort of a bit of flux at the moment. Basically, I agree with you, the markets are run up. People are now going to start looking, saying that what's going to be the next trigger. And budget is out. As far as earnings are concerned, that is out, and that's been a mixed bag. So I think some amount of profit taking will happen at these levels, basically, because this is the first, if it happens, it's going to be a first serious correction we are seeing from last December. So the rally has been quite strong and lasted for almost 5 to 6 months now. So I think, and if the correction happens, I think that's going to be a healthy trend actually.
Has the enthusiasm waned, Nischal, amongst the smart investors, the big prop guys, not the very long only guys, but some of the hedge fund type entities? Has the enthusiasm waned a little bit?
Yes, I think so, basically, because hedges typically, if you look at, they are large macro guys basically, and macros across the world have started churning again. So you have got this fear of US increasing the interest rates, and I think that's still unfounded according to us actually, but obviously that's taking its toll on the market. The second thing remains to be the situation in the Middle East, which is going to possibly, if it escalates, it's going to lead increase in the price of oil, which is not good for India. So I think that's where people have started saying, okay, there's good amount of profit we made in a short term. Why not take away some of it from the table actually? And again, the risk is slightly off the table, and you are seeing some of these hedges taking away profits.
Morning, Mr. Maheshwari. This is Anindya from the Delhi studio. Just wanted to ask you, if there is profit taking in the Indian equity markets, where do you think the money will go? Will people sit on cash, or will there be some other avenues where the money will move in?
So there are two ways to look at it. One is if these are hedge funds, basically the foreign funds, they'll take away the money and maybe move into some asset class or move into some other country altogether. So that's one part of it. If it is an India dedicated fund, then possibly you will see that the churning will happen. They will take away some money from the rate sensitives and go back into the defensive sector. Particularly a couple of them have done pretty well. If you look at the pharma and the IT results have been good. So I think, and there is, I believe, some amount of under ownership now. So I think some money is going to go in there. So that churning will keep on happening. But is the broader market still committed to a rate sensitive scenario? I think it's so.
So if that churn happens, you're saying that pharma, IT are the first gainers. What about FMCG? Do you see buying coming in? The FMCG numbers have also been relatively good. If you look at, for instance, an ITC or even a HUL.
Yeah, selectively I think people are going to be looking at FMCG also because once again, if the rainfall is not very good, actually I think the volumes are going to take a beating in the coming quarters. So that's why people are going to hedge themselves and maybe go into stocks like ITC, which has nothing to do with the whatever happens. Basically people do still smoke. So I think those are the stocks basically people are going to get more focused on there than rather than stocks actually where it's a direct impact on the inflation and direct impact of the rainfall.
And if I look at something like pharma, do you have any specific picks there?
Pharma, I think the top guys are still doing well. Basically, Sun has continued to surprise people. We have the Ranbaxy thing coming through basically, in the last quarter Ranbaxy results were quite a surprise where they're gone back to around 9-10% kind of EBITDA margin. So I believe the overhauling of Ranbaxy may be much faster than what people are believing. So that will surprise actually, and that's a big number. So I think Sun Pharma remains to be a top pick in the large caps. We also like Lupin and Dr. Reddy's.
Dr. Reddy, Sun Pharma, Lupin, these are your top picks, you said, right?
That's right.
And
That's right.
FMCG, you would prefer ITC over anyone else. Is that correct?
That's right.
And you were also
That's right.
talking about IT. Would you be focusing more on a TCS, or would you also buy into an Infosys, which is at that kind of a cusp inflection point? Would you put money in Infosys at the moment?
I think so. I would avoid for the moment for the reason that the stock has gone up and we have yet to see. So Mr. Sikka has come. So I would actually want him to deliver, because now I think the market has given a long time to whether it was Mr. Murthy or Mr. Sikka is still early. So market wants to see basically that things are changing and the metrics, and then only I think people are going to be willing to commit.
So would you buy something like, for instance, would you buy TCS? Would you buy Tech Mahindra? Two very different kind of approaches.
So TCS, Tech Mahindra, Persistent, these remains to be my top pick out there.
All right. Okay, so now you were talking largely about the foreign funds. So we've kind of worked out here that India dedicated funds, there'll be a bit of a churn, and you've identified these three sectors. You've also identified stocks for us, which you think that money would flow into. Now, if I had to look at domestic investors, both the HNI as well as the institutional investors, they have also been quite active for the past several months. Now, if they start booking profits, do you think that will entirely move to cash or move into gold or something like that, or will we see a churn there as well?
See, as far as the assets are concerned, I am not very sure actually people are going to move where basically, but if they are going to be into equity, I think, and they should be in equity, then I believe that they are going to hold on to the rate cyclicals actually. I don't think so people in a hurry are moving away from rate cyclicals to other sectors like FMCG and all. Maybe some people may move to pharma and all because the results have been pretty good. But FMCG and IT, if you look at the valuations, are pretty are not very encouraging.
So, if I were a domestic investor, you would say that largely the rate cyclicals, you're saying the rate sensitives is where domestic money would still stay. And would you be able to identify, in a sense, broadly for our viewers, what the thematics would be there? And keeping in mind that interest rates could go up in the US, there could be a slowdown, and at least some sort of a correction in the global markets, and we might follow. Where should they be looking at?
I think private sector banks is one of the sector basically they should be looking at. Axis and ICICI, I think these are the banks they should be looking at. Again, on the capital goods side, Crompton Greaves, Voltas, Larsen & Toubro, I think these are some of the stocks basically they should be focused on.
Crompton Greaves, Voltas and Larsen & Toubro. All right, Mr. Maheshwari, I would like to take this slightly broader, and that is, have you been reading or have you noticed what Governor Rajan has been saying about a possible crash?
Sorry, possible crash?
Possible global stock market crash. He's saying that we have now reached a situation where again there could be a global crash because there hasn't been any significant correction in, let's say, the US markets. Europe has corrected to a certain extent. He's saying that we are in a situation where a stock market bubble of sorts is building up and one should be ready for a crash. Have you been reading that? Do you agree with that?
No, I have not read Governor Rajan's statements there basically, but obviously if the global markets do undergo, if crash kind of a situation, obviously India will also react. But still I would still put it saying that given the current situation on the Indian markets basically and the outlook, I would still be invested through this crash in the equities and that too in India.
Yeah, and more and more, Nischal, more and more people are starting to call for a big global correction. Now, when that happens, US-led correction, by the way, US stock market-led correction.
Yeah, Prashant, I think US, if you really look at it in the last 2 years, the economy has not become picked up as what was expected. I think that's what makes people getting worried about it, because if you really look at it, most of these stocks are at record high, and these record highs are happened basically because there has been a lot of buybacks across the whole of US stocks, which has actually increased the prices up there. And people are saying that yes, as far as the business metrics and business economics is concerned, that is not improving. Just the valuations are going up for the reason that you are buying back more and more stock from the market. So because you have so much cash. So that's what I think people are worried about, saying that if the economics do not improve, the outlook on economy doesn't improve, is this sustainable or not? So that's a call, I think, what's happening. Yeah, if interest rates start going up, I think the reaction may be there, but will the reaction be the same basically when we had seen the Q3 tapering started? I don't see that kind of reaction happening now, for the reason that this is now getting expected, this is on expectations are getting built up and people are getting aligned to that. So the surprise factor is taken away from that. So yes, there may be a reaction, but there may not be a crash.
Here in India, right, you're saying? I mean, say for example, if the Dow were to fall 2,000, 3,000.
I'm talking about the US. I'm not talking about India.
Okay. No, so say if the Dow were to fall, say 2,000, 3,000 points, would you say the market?
If it happens over a period of time, and if it happens in a couple of weeks' time, it's totally different.
But anyway, you're saying India finds itself in a better position compared to where we were in May, June 2013 when QE taper talk first started, right? That's a better place to be in. Nischal, thanks very much. Good talking to you. Appreciate you coming on, and thanks for your time. JC Sharma, Vice Chairman and Managing Director at Soba Developers, is with us on the other side of this break. We are back in 2.